Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, March 14th, 2022. Welcome back to the podcast, Sekido-san.
Good to be back.
Always good to have you on. So let's see here. Last week, the ECB caught many bond market participants by surprise, focusing more on upside risks to inflation rather than downside risks to growth from the war in Ukraine. There are a number of other G7 central bank meetings this week, including the BoJ. So I suppose my question is, what should our listeners expect from the Bank of Japan's March policy meeting?
The BoJ will meet on March 17th to 18th. We do not expect the BoJ to make any changes to its framework for JGB purchases. The BoJ will likely make its policy decision after considering first the impact of import inflation on the household and corporate sectors, and secondly, risk contagion and transmission passes on Japan's financial system and credit exposure in the wake of the Ukraine crisis. Further details will likely be found in a March Tankan survey due out on April 1st and April Sakura report and a BoJ regional branch managers meeting mid-April and April BoJ meeting April 27th to 28th.
Okay, I mean, I suppose that makes sense. You know, the ECB is probably or the Eurozone economy is probably the most sensitive to the war in Ukraine from a physical, proximity and connectivity perspective. But with inflation, in Japan even running hot, I think PPI close to double digits. You wonder for the risks there. And sticking on the theme of inflation, could you please share with us what corporate price data tells us about domestic inflationary pressure in Japan? Inflation's rampant across the globe. So I guess my question is, have concerns shifted from a risk of deflation to a risk of inflation? And will the BoJ eventually have to make changes to monetary policy?
The February Corporate Price Index, PPI, released on March 10th, showed that domestic corporate prices rose 9.3% year-over-year in February, while export prices jumped 12.7% year-over-year, and import prices surged 34.0% year-over-year. The jump in import prices was particularly striking. Import prices have been pushed up by oil, coal, and natural gases. In particular, the price sensitivity of interim and end goods has been unprecedentedly fast over the past few months. While the domestic goods and services may be less sensitive in pricing compared to in other countries, Japan's price transmissions are taking effect. Even here in Tokyo, Japanese deflations has not continued, and inflationary pressures via import inflation are starting to push up consumer prices. The BoJ has managed the policy with a deflationary mindset over the last 20 years. So we should be watching for signs of change. I do not expect the BoJ to make any big changes to policy out of the upper house election in July. But we should all be paying attention to Governor Cloder's comments to the press following the March meeting for signs of a change to policy stance, as well as any other nuances. We expect the BoJ to fine-tune policy and shift its chief means of supplying money from COVID operation to climate change operation and the lending support program, while maintaining the scale of base money. Governor Cloder's comments could reveal just how much the BoJ will change its tactics.
Yeah, that's a really good point. I mean, the Japanese economy is a huge, importer of commodities. So even, really interesting to see how this how this affects an economy so removed from the Ukraine, pretty significantly. Those are some eye-popping numbers that you highlighted. And doubling back to the war in Ukraine, there have been reports of various degrees of potential losses at banks across the globe. What impact do you think the war in Ukraine will have on the Japanese banking sector in particular?
On March 9th, Finance Minister Shunichi Suzuki commented at the lower house financial committee that credit to Russia comprises only 0.2% of Japanese credit extended overseas. So the impact of the Ukraine crisis on lenders' financial standing will likely be limited, unless he noted that continued monitoring will be warranted. BIS International Consolidated Banking Statistics as of end September 2021 shows that Japanese banks had extended $4.8 trillion in credit exposure final list terms, including the $1 trillion to Europe and just $9 billion to Russia. Exposure to Russia was limited compared to the UK, France, and Germany, and credit damage is not seriously expected on Japan's banking sector. However, credit risk contagion from European banking sector will bear watching. Japanese investors have sizable overseas assets from direct overseas investing, foreign bonds, and foreign stocks. So Japanese investors have been conservatively funding and hedging in dollar since the Ukraine crisis broke out, and a yen basis has widened as a result.
Yeah, so it sounds like pretty limited direct exposure to the crisis, but as you point out, Japan is so interconnected to the international financial markets, certainly some second order effects that bear watching.
Yes.
And this widening of dollar yen basis that you point out is a great example. But why don't we do this? So why don't we wrap it up with the outlook across yen rate, spot dollar yen, as well as yen basis?
G10 currencies have not been driven by risk aversion as the turmoil in Ukraine persists, and oil prices have paused in their rise. Safe haven currencies, Swiss franc and yen, have weakened, and oil producer currencies like Aussie dollar and Canadian dollar are being sold. Euro and other European currencies are being bought again. Next week, all eyes will be the scale of the purchases and US rate hikes over the near term. As inflationary pressures picked up, the BoJ will likely be wary of rising import prices as corporate prices rises in February, but the BoJ appeared dovish amongst the G10 central banks. And diverging US-Japan monetary policies will likely support a higher dollar yen. Over the near term, we expect a bullish bias for dollar yen, with trading still in a 2.5 yen range, 115.50 to 118. The yen swap rate curve has been declining. Japanese investors have been piling into JGBs because of the Ukraine crisis, stoking demand among overseas investors for JGB asset swaps. JGB flows among overseas investors who know about the yen rate relative stability will push yen rates lower. We change our view for yen rates from a neutral bias to a downward bias. The yen basis curve has been widening because Japanese have been conservatively covering their dollar asset funding. The MOF reported that Japanese unloaded a net 123 billion yen of overseas securities in the week of February 27th to March 3rd, while foreigners net bought 1.6 trillion yen of Japanese securities. Japanese bought net 285 billion yen of overseas stocks and investment fund holdings and continued to unload overseas medium to long-term bonds by 364 billion yen and short-term bonds 45 billion yen. Japanese investors have been boldly buying foreign stocks and credit alternative assets when US and European stocks fell because of the crisis in Ukraine. Over the same period, foreign investors turned net buyers of medium to long-term yen bonds by 1.3 trillion yen, while continuing net buying short-term bonds for third straight week by 1.1 trillion yen. Foreign investors net sold Japanese stocks and investment fund holdings for sixth straight week by 910 billion yen last week. Amidst the Ukraine crisis, foreign investors have been cutting their exposure to Japan stocks and defending themselves with Japanese TDB asset swaps. Over the near term, Japanese will likely return to a neutral stance on dollar asset funding as the fiscal year end nears. Foreigners, sensing the current appeal of JGB asset swaps, will likely await the Fed's policy decision. Overseas investors will clearly be seeking arbitrage opportunities as they watch for changes in dollar-yen basis covering end March and end June. We still see a neutral bias for yen basis.
Okay, so bullish on dollar yen, and you can see why with how that currency pair has just exploded over the last week or so. Bullish on JGBs and neutral on the basis. Great stuff, Sekido-san. Thank you so much for joining us.
Thanks for having me, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.